Imagine a world where your savings don't just sit there, but actively lose value every single year. It's not a dystopian novel. It's our reality with today's money. But what if the answer to preserving your wealth has been hiding in plain sight, presented in a book that challenges everything we think we know about economics? Today, we're diving deep into the Bitcoin Standard by Saifedean Ammous. And trust me, after this, you'll never look at money the same way again. This book is a must-read for anyone interested in finance. And I'm here not as a guru, but as a curious learner who's like you on the journey to financial freedom. So what's the big problem this book tackles? It's our current financial system, built on what's called fiat currency. Before we had dollars or euros, humanity used sound money. Think of the gold standard. Gold was valuable because it was scarce, durable, and hard to create. It held its value over long periods. This forced governments to be disciplined with their spending. They couldn't just print more gold. Then came fiat currency. This is money that a government declares to be legal tender, but it isn't backed by a physical commodity like gold. Central banks, like the Federal Reserve in the US, can essentially create new money out of thin air. This ability to print money is the root of a major problem: inflation. When more money is created, the value of each individual dollar goes down. That's the silent theft happening to your savings. That $20 bill in your wallet buys less today than it did last year, and it will buy even less next year. Ammous argues this system of easy money has terrible economic consequences. It encourages governments and individuals to go into debt. It also creates what are called malinvestments. When money's cheap to borrow, businesses might invest in projects that aren't actually productive or sustainable in the long run. This leads to artificial economic booms, followed by painful busts and recessions. We've seen this cycle play out time and time again. The fundamental issue is that the very foundation of our economy, our money, can be manipulated and devalued at will by a central authority. This is where Bitcoin enters the conversation. Ammous presents it not just as a new technology, but as a potential solution to this centuries-old problem. So, what makes money sound? It needs a few key properties. First, scarcity. It must be limited in supply. Second, durability. It can't easily degrade or be destroyed. Third, portability. You need to be able to move it around easily. Fourth, divisibility. You can break it down into smaller units. And fifth, fungibility. Each unit must be interchangeable with another of the same value. Historically, gold was the best we had. It was scarce and durable, but it wasn't very portable or divisible for everyday transactions. Now let's look at Bitcoin through this lens. Scarcity. Bitcoin's supply is mathematically capped at 21 million coins. No more can ever be created. This makes it verifiably scarce, even more so than gold, because we don't know how much gold is still undiscovered in the earth. Durability. As a digital asset on a global network, it's incredibly durable. Portability. I can send millions of dollars worth of Bitcoin across the globe in minutes with just an internet connection. Divisible. A single Bitcoin can be divided into 100 million smaller units called satoshis. And fungibility. One Bitcoin is just like any other Bitcoin. Ammous argues that Bitcoin embodies these properties of sound money better than anything that has come before it. This is the core of the hard money concept. Bitcoin is hard money because its supply schedule is unchangeable and its network is decentralized. There's no CEO, no board of directors, and no central bank that can decide to create more of it. Its rules are enforced by mathematics and a consensus of thousands of computers around the world. Now, of course, there are criticisms. People bring up Bitcoin's energy consumption. Ammous counters this by comparing it to the immense energy and resources required to power the entire traditional banking system, from printing currency to maintaining branches and ATMs, not to mention the military costs of protecting global trade routes and currencies. Another point is volatility. Bitcoin's price does swing wildly, but Ammous suggests this is a natural phase for a new form of money gaining adoption. As more people start using it as a store of value, its volatility is expected to decrease over time. Finally, there's the issue of scalability, Ken. It handles millions of transactions per second like Visa. This is being addressed by second-layer solutions, like the Lightning Network, which allows for fast, cheap payments. So, what does all this mean for you and your financial future? Understanding Bitcoin is becoming crucial. You don't have to buy it, but understanding the principles behind it is a powerful tool. Right now, Bitcoin is primarily functioning as a store of value. People are using it like digital gold to protect their wealth from inflation over the long term, rather than using it to buy coffee every day. Its role as a widespread medium of exchange might come later. This brings us to the HODL culture you may have heard about. It started as a typo of the word hold on an old forum, but it has come to represent a long-term investment philosophy. It's about understanding the fundamental value proposition of Bitcoin and holding on to it through the price swings, with the conviction that its value will increase over a long time. Horizon assets adoption grows, and fiat currencies continue to be devalued. The key here is long-term thinking. This isn't a get-rich-quick scheme. It's a fundamental shift in how we think about saving and wealth. How should you approach learning more responsibly? Start by reading the Bitcoin Standard. Read other perspectives, both for and against. Start small. The idea is not to bet your life savings, but to educate yourself and perhaps gain some small exposure to an asset that has the potential to be a powerful hedge against the flaws of our current financial system. To wrap things up, the Bitcoin Standard presents a powerful case. It highlights the inherent flaws of our inflationary fiat money. System the silent theft of your wealth and proposes Bitcoin as the most robust form of sound, hard money ever created. Its strengths lie in its mathematical scarcity, its decentralization, and its resistance to censorship or manipulation. Whether you end up agreeing with Ammous or not, the most important takeaway is the power of independent thought in your financial journey. Don't just accept the system as it is. Question it. Understand it. The path to financial freedom starts with education and taking control of your own future. I'd love to hear your thoughts on this. Have you read the Bitcoin Standard? What do you think about Bitcoin's role in the future of finance? Drop a comment below and let's start a conversation. Thanks for watching, and be sure to subscribe for more deep dives into wealth, investing, and financial freedom.